Blockchain technology is one of the most important innovations of the last century. But in the midst of the brutal crypto bear market that we're in, many people doubt the potential for this game-changing technology. That's just sort of how crypto works. When things are going up, they think it's the future. But when crypto prices go down, all the tourists leave, and you quickly hear objections like, crypto has no real value, no use cases. Well, in this video, I want to explain a use case that will quickly silence these objections and some major recent developments that are forming this that can easily carry crypto to a new wave of adoption if executed properly. I'm going to break down everything you need to know in this video today as a blockchain developer myself who works this technology on a daily basis. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something you're interested in, then definitely smash that like button down below and subscribe to this channel. And if you want to get ahead of the next coming crypto wave, the best way to do that is to double down on your technical skills, become a blockchain developer, break in the industry, increase your salary well past 100K, and I can show you how to do that over at dappuniversity.com/bootcamp. All right, so let's get into this. Let's talk about this game-changing use case for crypto that can completely turn this entire industry upside down. And that's the use case of bringing real-world assets on chain. I made a video about this about a month ago because I believe this will be a big narrative for the next crypto expansion, but we had some recent developments that are actually executing on this vision and carrying us towards that goal. So number one is MakerDAO is adopting real-world assets with its DAI treasury. So if you're not familiar with MakerDAO, basically it's the decentralized autonomous organization, or DAO, that's behind the DAI stablecoin. So stablecoins are hot. You might have heard of like USDC or Tether, but there's also DAI, which is a decentralized stablecoin, which basically backs up its value with other cryptocurrencies. And MakerDAO is the DAO that basically governs this entire process. And they've agreed to invest $500 million worth of DAI in US treasuries and corporate bonds. And the revenue coming from this can offset some of the revenue that we've seen vanish from the crypto space in the middle of this bear market. And this is the type of thing, if executed properly, could really help ease some of the burdens that we see during these downturns like we're in right now. Plus a whole lot more, which we'll talk about here in a second. And on top of that, another protocol, Synthetics, has been able to generate $40 million of annualized revenue during the bear market based on its strategy of using synths, or representation of real-world assets, on chain. If you're not familiar with Synthetics, that's what the project does. Now, I see both of these developments as a big deal for a few reasons. Number one, this isn't exactly the inflection point for bringing real-world assets on chain, but it's a baby step in the right direction. Something can be way bigger. And I expect bringing real-world assets on chain to be a next narrative for the crypto cycle that's forming now. We're talking treasuries, stocks, corporate bonds, real estate, and so much more. Now, you obviously might see the implications for this on the surface. All right, but I actually want to break down and dig beneath the surface a little more, talk about some second order effects I think could be a big deal that I didn't include last month in my video talking about real world assets either. So let's start off with some fundamental assumptions. All right, so one of my assumptions is that the best use case for blockchain technology as we have it right now is to represent value so that you can do things with value. Things like transfer value from one person to another, swap value, aka trading, leverage value, all right? And so far, this has trickled down into cryptocurrencies themselves and also non-fungible tokens, or NFTs, okay? So we have amazing technology that lets you do stuff with this, like DeFi. You can transfer, you can trade, you can borrow, lend, leverage these assets in an open, transparent, permissionless way. You do the same thing with NFTs. You can trade them, you can leverage them, you can do all kinds of novel use cases that you can't really do anywhere else, all right? So now, fundamental assumption number two is that there's too many crypto skeptics sitting on the sideline, especially during this bear market, that doubt that cryptocurrencies themselves have any fundamental value at all. Now, obviously, I disagree with this for specific cryptocurrencies. I mean, some are absolutely worthless and junk, but there's a handful that I think have a ton of potential. Same thing goes for NFTs. Lots of people on the sidelines say, why on earth would I want to hold an NFT in my wallet if I can just right-click the picture and save it, right? I think it's a fair assessment in many cases. Obviously, I disagree with this in some cases. But if you bring real-world assets into the picture on chain, it completely silences all these objections and can really make use of all the useful infrastructure that we have right now to transfer, store, trade, leverage, value, whatever you want to do with it on chain. So, but why would you want to do this on a blockchain as opposed to the way we do it now? I mean, we got tons of ways where you can leverage this type of stuff in the real world. Well, blockchain offers a better alternative where you can trade around the clock. You have open access to this stuff. It's easy to get started. There's no red tape. There's transparency. So you can see anytime that value is transferred, you can audit the integrity of everything. There's instant settlement in accounting. There's no waiting forever to get your money out. You can do things like self-custody. I mean, I could go on and on. And so crypto has created better rails for this stuff. And currently all we're doing is trading cryptos and NFTs with these rails. But if you bring real world assets that there's clear demand for onto these new rails, then that would be a massive game changer. All right, but let me explain a couple second order effects that you may not see initially. Now, one, obviously there's a much bigger market for these types of assets in terms of demand than actual cryptocurrencies or NFTs themselves. There's way more participants who want to buy and hold these things. And so if you just capture a fraction of that activity and put it on chain, then on-chain activity is going to soar like crazy. Even in bear markets in the stock market, because there's always demand, buy and sell these things or move into other assets. It's also going to create arbitrage opportunities, between the traditional financial system and what's happening on chain. But one other big effect that I think people don't realize is that this type of activity can actually affect the value of really useful cryptocurrencies. And that's something I'm personally super excited about. Obviously not financial advice. I'm telling you to buy or sell any cryptos that I'm going to mention in a second based on this information. But let's take Ethereum, for example. And when I say Ethereum, I mean the blockchain, but also Ether, the cryptocurrency that's the gas token for that blockchain. So, if you've watched my channel for any length of time, you know that I'm a huge bull on the Ethereum technology itself. It's the leading smart contract platform by a long shot, and I anticipate to stay that way. And so if real world assets move on chain, I expect Ethereum to capture most of that activity for now. And in the past, we've definitely seen a high correlation between on-chain activity, all right, and the actual price of Ether itself. So if the activity goes up, Ether tends to follow that. And if the activity goes down, Ether also follows that. And you could come up with a million reasons why that's the case. But I think one big reason is that there's so much utility value to Ether itself. You can pay for transactions with it. You can stake it. You can use it as collateral for leverage and DeFi, so many more things. And if we bring a lot of that activity on chain, then I think that could actually cause a lot of value to accrue to Ether itself and ultimately make the price go up over time. Again, not financial advice, but that's my thesis. Now, on top of just cryptocurrencies like Ether, I think this also is a game changer for other tokens that have tried to provide utility in some way. So for example, if you have an application, a DeFi app, for example, that has a token that, helps do revenue share for people who hold it, okay, then that can actually be a big deal for the utility of that cryptocurrency itself. We already have these types of things, but the problem is they're dependent upon people's appetite to buy and sell cryptocurrencies, okay? So let's say you have a token that's an exchange token, and if you hold it and you stake it, you get a part of the trading fees. Well, in the middle of a crypto bear market, like nobody really wants to hold that token and stake it because the trading volumes are way down. There's not really much opportunity to get revenue. But if you bring real world assets on chain and all that activity is sustained, even in downturns, there's way more incentive to hold those tokens that you could lock up and stake and get a portion of trading fees for those types of applications. And then another effect on this is if you bring all that activity on chain, some of that appetite is going to get trickled down into crypto speculation itself. If you onboard all these people who are, doing finance on chain, it just increases the value proposition for these other speculative cryptos to give you something else to speculate on, because there's speculation all the time in traditional finance, and crypto is just giving them an extra option on chain. Now, obviously, the one big objection with all this is going to be regulatory concerns, because right now we have the technology to start doing this, and probably the biggest thing holding people back is just not knowing what's going to happen with regulatory concerns. Now, I do think we can make progress in this direction. Now, there's sort of a fork in the road. Really what we need at some point is going to be regulatory clarity, okay? The best option is that we push past these regulations to where we get, a green light on pretty much everything, all right? Now, if that doesn't happen and we still have some restrictions in place, then that's okay. I still think that some of these use cases will be fair game to do on chain. But as long as we have that clarity on what we can and can't do, then that's going to make a lot of people who are sitting on the sidelines in terms of this implementation actually pull the lever and bring at least some of this activity on chain, even if we can't get everything that I'm talking about in this video. And if we can get past some of these regulatory concerns, that's going to open up the door potentially for lots of other use cases, with NFTs. Again, like I said at the beginning of this video, there's a lot of skeptics out there saying, hey, NFTs are dumb because it's just pictures on a blockchain. Why do I care about that? Now, but if you can flip that on its head and say, well, with NFTs, you can do things like transfer value of real world assets like real estate, intellectual property, and things of that nature, then that's a recipe for a massive explosion. And if that happens, then that's going to reinforce everything else that I talked about in this video, like the value trickling down to the cryptocurrencies themselves as well. And so all this holds the potential for real world assets to be shaping up as a next big narrative for the next crypto expansion. Regardless of how far that we actually get with this in the next year or so, crypto is highly narrative driven. And if we see more progress moving in that direction, we can see a lot of interest around this space, even if we don't cross the finish line very soon. And so if you want to get ahead of this next wave that's coming, then what can you do? Well, as always, you can smash that like button down below for the YouTube algorithm. You can subscribe to this channel to see more videos just like this as it starts to unfold. But right now, the best thing that you can do is double down on your technical skills and become a blockchain developer so you can take advantage of this before it really pops off. And so I can show you exactly how to do that step by step, the fast track, over at dappuniversity.com/bootcamp. Okay, you really don't have to be an expert to get started today. I've helped people with zero coding experience become real world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching Dapp University.